Hey everybody, Double P here and welcome back. So today's trading session is going to be really quick for you. So today we trade coin. Yesterday we trade Mara, which was in the crypto space, and today we traded coin, and we had a nice little short on it. So let's go over this right here first of all. So you see I'm in a full margin account right here. Now, if I'm not looking at you as I'm talking to you, I'm looking at my screens up here, so forgive me there. I'm not trying to be rude or anything. So you see here, I got to blur out my data because I don't want to violate the terms and services of my brokerage account. You see the time right here, it's October the 19th, 10:50. People ask me, they're reaching out behind the scenes, why does it say partially delayed data in your account? Well, okay, that's a great question. I got to repeat this day in and day out. I've been repeating it for the last few weeks now, almost over a month. So stock is in real time, MX, NASDAQ, New York Stock Exchange, all real time. You see it right there, real time feeds. Equity options, same thing, real time feeds. Futures and futures options, I don't trade futures. I don't really understand it, so I don't need the feed for it. And I've asked my broker to shut it off. And then Forex is real time and others in real time, so that you see that there. So let's get into Coinbase. First thing we do is we always draw our box, because when we draw our box, we know exactly what's happening with the trade situation. When Coinbase opened up way above the box. So there's a certain limit that you need to understand, that when something opens up above or below the box, depending on how high or how low it opens above or below the box, you have to understand something, that if it opens up too high above the box, this is what's going to happen. You're going to have this type of play right here. You're going to have a rip to the upside, super parabolic, and then you're going to have a violent pullback to the downside. So when this opened up, when Coinbase opened up, look at where it opened up in regards to the box. And I knew, I just sat, held my position really tight and watched it. When this first violent candle ripped, and then we had this action right here, well, that's when I started to look at taking my position. As you know, we always go on a 5-minute candle. We look for the 5-minute candle setup to get into our trades, roughly around here. So what point was this? 9:50. So roughly around this particular point right here, this is when I'm looking at taking my positions right here, right? And I took my position a little bit earlier. So let's come back over here to the 1 minute so that you see it. So when I took my position, it was roughly around 9:57 or so. So let me just have a look there. So roughly around here, that's when I took my position. Right in this box area, when I saw these two candles right here and this big rip, that's when I jumped in and took my trade, because I knew that this action, when you see these big sell side candles pushing to the downside, when you see a third huge candle like that, big red candle, this is going to be a trade that's just going to shoot to the downside. And you've got a lot of room to play down here. You're going to have some volatility up here, then it's going to rip down again, it's going to break through. I put Fibonacci over here because I want to be able to make sure that not only do I have my primary system set up, which is the box, right? I want to add Fibonacci in here because I want to know precisely what my levels are to be able to take profit and be able to have my stop loss. I don't have an automatic stop loss. I never put one in. I use Fibonacci as my stop loss, right? So you can see right here, I took this massive, great trade right down here. So let's come over here. Let's come over to the order fill right here. So with the order fill, you'll see right here, 660 sold at 860, 957, 1002. That was a 5-minute trade. That's all I needed. I bought 100 contracts because that's what I do, because I have a very big account. Right now, I send this out late to my guys today because I was scrambling to do my orders. So when I sent it out to my guys, I sent out the 2221 coin 295 strike puts, right? You see it right there. I told them it was a quick scalp trade. So let's move this over here so that you can see it. I sent this out to them at 10:07. That's when they got the text. It was the 2221 coin 295 strike puts, $6 for the put contract. Told them to get 5 contracts. Obviously, you see I got more because I have a way bigger account, and I just went, quote unquote, balls in. Don't want to be too, I want to keep it kind of PG here. Tight 10%, 30% profit, and then obviously you see my text here when I got out before 10:13 when I sent it out because I had to do my trades. But then I told them to get out when I was looking at it because I'm always looking out for my guys. So I might have sent this out late to them, but still they were not late to the party because they got a really good movement. So 10:13 told them to get out, right? Because I had other things that I was doing. So let's look at the trade that they got at 10:07. Look at where they got in, which was a fantastic trade for them. So they had this movement right down here, this box, right? Now, if they would have stayed in, they would have worked through all this chop right here. It was the 295, it was a 295 put. They would have been stopped out, and there would have been a lot of money that they probably would have lost. My guys are smarter than that. So 10:07, this area right here, they had all that action because I told them it was a quick scalp trade, so they know it's a quick scalp trade. A quick scalp trade is how long? 2 minutes, 5 minutes, maybe 10 minutes tops. Quick scalp, in and out, couple of bars, right? You see the bars here. This was 1, 2, 3, 4, 5, 6 bars. That's enough to make whatever type of money that you want to make, be in the market and get out of the market. So you see that's exactly what they did right there. In and out, bang, bang, done, right? And then you see right here, you'll see what I made today. In and out, right there, $20,000 on a quick scalp trade for Coinbase. So with that being said, if you like what you see, and let's come over here, let's go over to, let's talk about Fibonacci for a quick second. I don't want to take up too much time here. You see these lines right here? The breach, if a breach would have passed 61, my guys know, way before that, my guys know that they got to get out at the 76.4 level, 297, right? They got the trade, they hit the trade right here at 295 put, they got out. Look at when they got out. They really got out either at the 294.61, or they would have got out on this candle. This was actually the same candle, 294.61, 294.61. So they would have got out right around here at the bottom because they know when they're looking at their timers, they know these are 1 minute candles, right? So we have a system where we set up where we're looking at how much time is left in the candle. So they know when it's dropping dramatically like this, they know they have a stopwatch and they have a counter that they use to be able to make sure that they understand and know how much time is left in the candle, whether it be a 1 minute candle, 5 minute candle, 15 minute candle, 1 hour candle, whatever. Always have a stop, always have a virtual counter, stopwatch counter, so you know exactly what's going on with your candles, so you know exactly when to get in and to get out by watching what's here, because this is a scalp trade. So you don't have to get up and go anywhere. You don't have to go to the bathroom. You don't have to get up and go to get some, go get some water. You're in a scalp trade. Your scalp trade is a matter of minutes. Sit there, be in and be out and get out. Now, could they went for a second On the third scalp position, absolutely. After they got this right here, they would have waited for this retracement right here up to the 50%. Didn't tag the 50%, almost tagged it, but they would have waited for this consolidation right here. They would have seen these two candles right here, all these three candles, 1, 2, so those three candles right there, they would have waited for that, and then right here, look at that triangle trade box for another quick scalp. And that scalp would have been a beautiful scalp, right? So that would have been, that's like a 15-minute scalp. Let's go over here to the 5-minute chart. Let's see how that would have developed. So that would have been roughly 10:20. So right around here, 10:20 to 10:35. So that would have been a nice 15-minute move right here. That would have been a nice 15-minute play, quick scalp, bang, right? There's the top, there's the bottom, drawing the triangle. And look at where it is. It's almost touching the box right there, right? So that's what you want to see. So if you like that information, you like what you see, you are continually seeing that it's not me, okay? I may be the leader. I've got the course, I developed the course, but my members, if you were to go over to my website right now, somewhere you're going to see this link, somewhere up there, down here to the left or to the right or wherever, you're going to see a link. Go over to the site. You're going to see a bunch of testimonials, a bunch of case studies. That's all it is I have some very, very, very successful members. So it's not me. I designed the course. I developed the course. My members came into the course. We've got a members area, secure private members area. They ask all sorts of questions. I answer all their questions. We got a full-blown help desk for our members. They got the video recordings. They know exactly how to do calls. They know exactly how to do puts. They know exactly how to do spreads. I don't fool around with all these exotic option plays like lizards and condors and all that kind of stuff and butterflies. I do them. I know how to do them. I just don't do them because I'm an intraday momentum option scalper, and I'm a directional trader, right? I keep things deadly simple. When you try to make things too complex, that's when you, especially in the market, that's when you lose money, right? The market does three things. The market goes up, or the market goes down, or the market goes sideways, like a fish. Up, down, sideways. That's it. Keep it simple, right? So the course is keep it simple. The real key, the real skill, the real strategies is what kind of security are you going to play, and how are you going to play that security, and what strategy are you going to use, and how quick or how far are you going to be in that position, or how long are you going to be in that position. Those are the strategies. Those are the things you have to think through. And then it's about, you got to pick the right option, you got to pick the right strike, you got to pick the right option play, you got to pick the right limit order, and then you got to be able to know to map out your profit, and you got to know when to have your stop loss, and you got to know to be in and out. That's it. So if you like all that stuff, that's what I have at the Platinum Traders Beta Testers group. Head on over to the site. You'll see the site somewhere. It's up above here again. Hit that like button. Smash that like button for me. Please share this so everyone else can see it, so that they can learn as well. It's all free. I do live trading every day for you, so you can see everything. And that's it. So with that being said, I'll see you in the next trading session. My name is Double P. Over and out. Take care, everybody.